Technical analysis is a method used by traders and investors to evaluate and predict future price movements based on historical market data. Here's an explanation of key components of technical analysis. Familiarize yourself with basic technical analysis tools. Candlestick charts. These charts display price movements over a specific time period using candlestick shapes. Each candlestick represents open, high, low, and close prices for the given period. Patterns and trends in candlestick charts can provide insights into market sentiment. Trend lines. Trend lines are lines drawn on a chart to represent the direction and strength of a trend. An upward trend line connects higher lows, while a downward trend line connects lower highs. Trend lines help identify potential support and resistance levels. Use technical analysis to identify potential entry and exit points. Support and resistance. Identify levels where the price has historically had a hard time moving above resistance or falling below support. These levels can serve as potential entry or exit points. Moving averages. Moving averages smooth out price data to create a single flowing line. They help identify the overall direction of the trend and potential reversal points. Relative Strength Index, RSI. RSI is an oscillator that measures the speed and change of price movements. It is used to identify overbought or oversold conditions, suggesting potential trend reversals. Chart patterns. Recognize patterns such as head and shoulders, triangles, and flags. These patterns can indicate potential trend continuation or reversal. If a cryptocurrency consistently bounces off a certain price level, support, and struggles to break through another level, resistance, a trader might use this information to establish potential entry and exit points. A bullish trend might be confirmed if the price consistently stays above a moving average, while a bearish trend could be indicated by the price consistently falling below the moving average. Why technical analysis matters? Timing trades. Technical analysis helps traders time their entry and exit points, optimizing the potential for profitable trades. Risk management. Understanding technical indicators aids in setting stop-loss orders and managing risk. Market sentiment. Analyzing charts and patterns allows investors to gauge market sentiment and make informed decisions based on historical price behavior. In summary, technical analysis involves using historical price data and chart patterns to make predictions about future price movements. By applying tools like candlestick charts and trend lines, investors can identify potential entry and exit points, ultimately improving their trading decisions.